the next 6 weeks. Specifically, M2 should increase from 111 trillion this month to 114 trillion in September. So when looking at the Bitcoin chart and thinking about, okay, if we're about to get more significant upside move coming into Bitcoin here, then what is the most likely price target for that to be? Well, here I'm looking at the 2.618 Fibonacci level, and that's just around $155,000 right now. That to me looks like a very reasonable target for Bitcoin's next major move, the next local top for BTC. And it's the same logic with Ethereum. If Bitcoin heads to $155,000, then that should be more than enough tailwinds behind ETH to send it to the 1.618 Fibonacci line, especially with Tom Lee and Joseph Lubin and all these guys buying tens of billions of dollars worth of ETH, right? Now, that 1.618 line, that's just a few $100, about $7,000. So there you go. That's my argument behind these price predictions. Basically, M2 is projected to make a significant upside move into September and find a local peak. That's what the data is showing us right now. And since these Fibonacci levels for Bitcoin and Ethereum are the next logical price targets, I think Bitcoin and Ethereum can have corresponding moves in September up to these target levels. Now, that's a nice little talk. Let's discuss where prices are likely heading after the next local peak in September through the rest of the year and even in 2026. Well, just to state it directly, I think we probably get a slight pullback in prices in October after we find the local peak around 150K BTC, 7K ETH. We're probably going to get a pullback. That's also the forecast for global M2. Global M2 pulls back a little bit. Markets will correlate with that. But after October, we then resume the upwards price action through the end of the year through 2026. By the way, if we get rate cuts in September, which likely, not certain, but likely, that also probably is a buy rumor sell the news to some kind of extent. And it's because of the same reasoning here again. So global M2 generally projected to keep increasing through the end of the year and through the first 2 quarters of 2026. So if M2 will keep expanding over this time frame, then accounting for some modest pullbacks, some disgusting crashes within all that, then the price of Bitcoin and crypto should keep in theory increasing as well. And again, timing of the global M2 and the next rate cut coming, it all just lines up so well. And rate cut comes, everyone's expecting things to go up and people start taking profits. Surprise. Anyway, beware of the October dip. It's likely in this scenario. Remember, there's a lot of uncertainty as to whether we're still in a traditional 4-year cycle or if we're in an extended cycle. And we get a 150K BTC top in September or early October. Everyone's going to say, that's it, cycle's over. We're done. That was the top for 4 years. Good night. See you next time. I disagree. It will not be. Okay? It'll be next level top and people will take profits. You're allowed to take profits, right? But people will be grave dancing saying it's all over when BTC pulls back from 150 to 110K. Those are going to be some crazy times. Look, I'm increasingly thinking that we're in an extended cycle because of the treasury companies, because of all the ETFs and everything else, the correlation with the stock market. But if we do get 150K in Bitcoin in September, followed by modest correction in October, I guess a lot of people will interpret this as the correction as the beginning of the bear market or the 4-year cycle theory, which is going to catch a lot of people off. But consensus ideas tend to have a way of not happening, and that's kind of the consensus right now, that the 4-year cycle happened. But in fact, Bitcoin might just be following global M2 and will only go higher as it follows M2 up through the end of 2025 and into 2026. Under an extended cycle idea. Basically, the idea is that people will sell off their bags way too early and end up getting sidelined because they're fundamentally misinterpreting what's really happening here. So, that's the big idea of this video. And obviously, we'll continue to discuss this as we head into September. Keep an eye out for it to see if this thesis comes true or not. And then go watching for Q4 of 2025 and then Q1 and Q2. We'll be making videos, guys. Don't worry. We'll keep you up to date on the M2 and everything happening in crypto. Thanks for watching. I'll see you in the next one.
And where do you see prices for Ether going?
Well, I looked at some research from Sean Farrell, who's our head of digital asset strategy, and he put out a presentation about Ethereum today. So he thinks the ratio of Ethereum to Bitcoin could go back to its 2021 highs, which is about 0.14. That would value Ethereum today at around 16,000, and it's currently 3,700. So he's just saying Bitcoin ratio versus ETH, let's get back to where it was 5 years ago, which makes sense because it's a better story today than it was in 2021. And that gets you up, close to 16,000.
So you heard it right there. That was Fundstrat's Tom Lee, Wall Street legend, suggesting on CNBC about a week ago that we could see ETH priced at $16,000. I've also heard $30,000, and some of you are saying 100x. Get it in line, guys. Come on. Anyway, $16,000 type of prediction. But what makes it particularly interesting is that Tom's calls over this last year have been pretty damn on point. Basically, he's been on bullhorn constantly declaring that even though equity markets have seemed overheated or they seem scary, that we're going to continue to make new all-time highs, and he has so far been correct. Optimists always win in the end anyway. Screw the bears. Well, what about his Ethereum prediction? Interesting. Specifically, is a $16,000 price tag for ETH realistic for this cycle? That's the question for today. And we're going to look at the larger fundamental factors for Ethereum, explore the charts here, and talk about the timing of all this in order to try and get a better handle on, well, what the heck is even possible here? Can we really see a $16,000 Ethereum? So, Since we're on the subject of Tom Lee, let's circle back to this CNBC interview and listen to his reasoning for why he is so bullish on Ethereum. So basically, he's currently detailing these fundamental catalysts. Now, understand that Tom Lee is also the chair of BitMine, which is a publicly traded ETH treasury company. I own that, by the way. So he's got a vested interest in seeing ETH do extremely well. His company will do better in that situation. But I still think we need to listen carefully to what he's saying, and then we're going to discuss here.
In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stable coins kind of green-lighted, which is the ChatGPT moment for crypto, but it needs a smart contract, so it doesn't work on Bitcoin. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. Ethereum is the preferred choice for Wall Street because it's had zero downtime since inception, matching what the banks want, 100% uptime. It's also the most legally compliant and secure blockchain because it's recognized in the US and it's the second largest blockchain. And the third is almost all of it is taking place on Ethereum. JP Morgan's building their stablecoin on Ethereum. Robinhood is tokenizing on Ethereum. You know, the custody banks are doing it on Ethereum. So it's really where Wall Street meets, but that's also where AI is meeting crypto. Because as you know, as we tokenize and move towards robots, you need a token economy to control that, which is taking place on Ethereum.
Tom basically laid out three reasons for why he sees ETH doing so well moving forward. Reason one, the Genius Act is the ChatGPT moment for crypto. I dig it. I've talked about this regularly, so I think Tom is right here. The Genius Act will take the stablecoin market cap from its current hundreds of billions to the trillions with a T. It's going to get crazy. That's a lot of liquidity in the market. That doesn't happen overnight. It's going to happen over the next few years. Just like he said, these stablecoins need smart contracts, so a lot of that business goes to Ethereum. So also a big beneficiary here, of course, but got to talk the books right. Reason number two, Tom says that the SEC is asking Wall Street to move the entire financial system onto the blockchain via an SEC initiative called Project Crypto. Okay? Now, Tom might have overstated this with the word entire. He's definitely pointing to the right direction. And guess who agrees with him? Larry effing Fink, okay, the CEO of BlackRock, who's been calling for the tokenization of literally everything, okay? The SEC did announce Project Crypto earlier this month, and according to a report from Bernstein, part of the project is actually aimed at the tokenization of stocks and bonds, moving them on-chain. Of course, makes sense. Bring more bonds on-chain, bring more liquidity to bonds, America wins. Bring more money to stocks, open it up for a wider variety of people on-chain, America wins. It's all going to come into 24-hour trading as well, meaning the casino's never going to close. Now, Tom laid out the case for why Wall Street will use Ethereum, zero downtime, second largest blockchain, legally compliant and secure, and I agree with all that, okay? And indeed, we're already seeing signs that Wall Street is moving towards Ethereum, which of course was Tom's third point. So I've got a few examples of this for you. Before we get into that, guys, who's going to give you up to $1,399 cash back just for depositing crypto? FMX, OG cryptocurrency exchange, available to everyone everywhere. You might get VPN in some cases. But here's the deal they got for you right now. Deposit $1,000, get $200 back. Deposit $10,000 for $999 cash back money. $15K deposit, $1,299 cash back. That's insane. There's huge cash bonuses. If that wasn't crazy enough, they're also going to instantly upgrade your VIP level 2 exclusively when using my link right down here. That's 50% off your spot trading fees, 40% off your futures trading fees. This ain't some tiny bonus. You're trading a lot. You know how much these fee discounts add up. You know how super bonuses are. This is a serious opportunity for active traders to stack rewards and to smash costs. FMX approved exchanges, OG cryptocurrency exchange. I've literally been trading there 4 years, okay? But this promo will not last forever. It's not going to last for years. It's limited time offers. Hit the link down below. Check it out. Start trading the way you should with freedom. So let's dive into just a few reasons that you picked out of the hat here. BlackRock's Middle Treasury Fund. Robinhood's tokenized trading system. JP Morgan's Onyx platform. Fred and Hellman's Benji Fund. Fidelity's big focus on Ethereum. Goldman Sachs tokenized initiative. Bank of America Citibank talking about lunch stablecoins. Where do you think that's going to happen? And on and on and on. So here's the deal.